Pretty much your silence that does not really bring out who you are. The moment you open up, especially to comment on something, then we can form a basis to say you belong to this side. Well put.
Indeed. We're in a finance season.
Yep.
Proper. Some of us sometimes forget that the budget process starts at the end of August. And then brings us
9 months process.
9-month process, right? Brings us to right about this time where then the elements of the finance bill are then brought out, and then we go into a series of public participation, which we are currently in.
Keeping us busy these days, every Kenyan, literally.
Yeah, and that is a practice. It's been happening.
Yeah.
But in 2024, probably historically, is the first time that it was then put out on a large national scale, and by virtue of that on an international scale, a global scale as well. And then we saw after that there was this renaissance, essentially, where everybody wanted to know, to a clear understanding, what happens with the country's resources, how they will be spent, where they will be gotten from, how much tax you will be subjected to, what projects the government is involved in. Everybody wants to know, whether it is the person who is sweeping or the person who's sitting in their luxury vehicle, across board, cutting across social strata. Everybody wants to know what is going on. Brings us 2025, whereby it would appear as though folks have been a little bit more careful in terms of what goes into the finance bill, or have they? And I guess that's the question we start. Yes. Or have they been smarter?
Yeah.
Or have they hidden things in plain sight? And so that's what we want to open up today. Of course, we're coming off the place where people have tried to explain what the finance bill actually is presenting for Kenyans this time round, and we've ended up in court behind bars. But we're going to do it a little bit more today. And have we gotten to a place whereby now the finance bill is protecting or injuring Kenyans? Bilo?
These days, everyone I see, including even people working in my business, the first thing they ask is, what is in the finance bill this time? Everyone is so keen about it. After last year, it has really broadened the understanding of what all these things are about, and people want to know what's going on.
Yeah.
But there are two aspects. If you look at finance bill, there are two issues I think that I want to bring out. One, the government's perspective. For the government, it's always about the revenue. That's what the finance bill is about. How do you raise revenue, additional revenue for running the government, to meet the additional expenditure. That's as far as the government is concerned. Nothing else. The rest is all a story on policies on how to do this and how to generate that. But for the businesses, for instance, and the public, it's not about the revenue. It's about what is the impact of finance bill on your cost of living. What is the impact on your life? And that's the aspect that we are looking at when we are looking. So the two are that's why the two are always at odds. The government wanted to raise revenue, and Kenyans are looking at what is the impact on my life. And that is the part that the government doesn't want to bring out always, the impact of the finance bill on. So if you look at finance bill generally, any time, including this one, to answer your question, simply put, it would injure, of course, because it would affect your life adversely, because it would affect your cost of living. That there's no doubt about it. Even this one, which many people would look at it and say, no, this is not as bad as last year.
Yeah.
There are no new taxes. You look at those are the terms the government used when the CS was discussing this a couple of months ago. Said no new taxes on this one. You will not find them. But at the end of the day, when you play smart, that's the way. Let me put it that way. Then the devil is in the details. You'll find that some of the measures that they have taken would obviously have a significant impact on the lives of Kenyans, on the cost of living. But the simple reason that you want to raise additional revenue, however small it is, means you have to get some more taxes.
Right.
From that finance bill. That's basically what it means.
the word progressive is put behind other jurisdictions, whereby progressive means that your economy is moving forward, it's thriving, and at the same time you're able to take care of the livelihoods of people, whereby they don't feel the pinch as much, on one hand. And then number two, there's actual visible, tangible manifestation of what these taxes are actually doing. So is it possible then to have a tax regime in place that does the things that they are needed, whereby the people are taken care of?
Mm-hmm. Look at it this way. There's no time in the history of this country Kenyans have said we don't want to pay taxes. Kenyans have been paying taxes. In fact, we pay, and I've always repeated this, we pay the highest amount of tax in the whole of East and Central Africa. More than all of these African countries combined. I mean, there's no doubt that we have no objection to paying, and Kenyans that pay taxes. The question is this tax working for you? And is it being done in a manner that really helps the economy also grow and also have money? You have some money in your pocket and meet your cost of living and so forth. No, those are the challenges. That the way the government has looked for taxes in this country has let me use the word, has become punitive. Really, I mean you're looking at, we must raise revenue. You're not looking at other aspects of the action. For example, that people need to have some money. They need to have some disposable income. They need to, you have got school fees to pay. You have got so many other things you need to do. So it's not all about giving money to government and government working for you. I need to do some things myself. So I think there's something about, if you look at our constitution, that talks to the burden of tax. That cautions is one of the principles in public finance, that it should not be a burden on society. Governments, yes, have the powers through the parliament to tax, but they don't have absolute power to tax the way they want. It's up to the people through their representatives to determine how much money we want to give to government to do whatever we want. The rest we want to keep. I mean, we want to do our own things.
Sure.
Yeah.
That's the concept. But where Parliament then loses that, and executive also loses that, then it appears that we are the ones who know what is good for you. Bring the money.
So
I think that is where the trouble we are in now, where the government thinks they have a monopoly of ideas. They determine your life, and they're the ones who decide what to do, and they tell you, give us all the taxes, collect more taxes. So every year you're increasing 300, 400, 500 billion.
Carol, you've mentioned something that is very critical, in the sense that whenever we look at a finance bill, there is always the aspect of raising more taxes and the impact that would have on the people, and that the government would never want to share this information on the impact that additional revenue, additional taxes would have on a common mwananchi. Is it about time that the government finally started having honest and open conversations with Kenyans so that we all can agree? Because like you've said, Kenyans have never said we do not want to pay taxes. We want to have honest conversations so that we all agree on how we move forward. Is it about time?
No, but you remember when this administration came in, there was a lot of talk about, why don't we have a conversation on these things? Why don't we have a national, gathering of Kenyans to discuss the economy, so that we actually decide what is that we want, because you want to grow some aspects of the economy, but when you put taxes, it's really pushing down that aspect of that sector of the economy. And there's many examples of the economy. Where does tax come from? It's from businesses. People have to make an earning. If you have level of earning, if your income is going to be affected, you can't do business. You shut down. Today I was reading in one of the media that NSF complaining that in the last 2-3 years, up to nearly 500 employers who are paying contributions, for the employees, shut down. I mean, it's. But when you look at the statistics, they'll tell you millions of companies have shut down in the last 5-6 years. So the thing is, there's need to have that. But I don't think the government, this one and any other, would be willing to discuss that, because they know that the bottom line means they would be stopped from doing certain things. But that conversation is available every day through our representatives in Parliament. Every day is available to them. But that's the challenge we have, that Parliament is not really pulling its foot down and saying, no, this is not good for our people. You saw it in the finance bill, where things were, there are measures that were specifically hurting a particular MP and his farmers and his own electorates, and they went ahead and still voted for it, and later saying, "Oh, sorry, we had to."
So one thing you said, Bilo, is that yes, we're looking at the numbers, we're crunching, and we're saying, okay, this is what it means in the fiscal year ending July 2026. This is what to expect. The numbers are very important, but then more important is for us to talk about these things. That if we don't talk about them, that we're doing a disservice, first of all, to ourselves, and then to the general public at large, in terms of what this actually means and how it affects you. And so that is actually part of citizen-based governance, to say that, look, we need to know exactly what's happening, because it's very easy to hide things in the mask of ignorance. You can hide it there because you know that people are not going to ask, people are not going to speak, people are just going to take it as it comes and, fly with it. So now when we look at some of these things that could be concealed in the details, what are some of those things that we're probably going to have to... I don't want to say look forward to in the next 12 months or have the displeasure of experiencing when it comes to this new tax regime?
You see, look at the most common one that has been discussed by everyone. This moving quite a number of products in the pharmaceutical sector, in fertilizers and many others, from zero rating to being exempt from VAT. Simply put, what you are telling, what you are doing, the reason why you are doing that, because there's a reason why you are doing it. You're not just doing it because the word zero rating and exempt
nice.
have no meaning. No, they'll tell you very smartly, look, there's no tax on exempt, and there's no tax on zero. There's nothing. There's no difference. That's what the government will tell you. When they want to be smart. But then, okay, if there's no difference, then why are you moving it from this schedule to the other schedule? It's because it has an impact. It has an impact. Because here, I am able to claim that input tax, that VAT on the raw materials that I import in order to make those products. On the other one, on the exempt one, I will not have that opportunity. So what they're saying then is they're avoiding, that because what it means, input means that if I am buying this phone, I am going to be sold this for 100,000 shillings, for example. Then the invoice will read 100,000 plus 16% VAT they'll charge.
Yes.
So if it is zero rated, that is what I'll pay. So that 16 now, if I am selling it again, I will also charge another 16% on it. So I will knock off my 16 on that out when I'm selling, with the other 16% that I paid when I was buying it. But now, when you're moving it to zero, I will not be able to do that offset. That's basically what it means. That I will charge that 16% for them and pay them, but I will not be able to
you
offset.
Can't recharge.
Yes, when it is zero, that 16 which I paid, I will not be able to offset. That's what it means on exempt. So they will get their 16. That's what it means.
But you won't.
But otherwise, they would have got nil because I would have offset between the two. Now they'll collect the 16 straight. So it's a way of getting more revenue. And so now for me, I will still charge 16%. So my phone will still have the same price. So in fact it will be more because now I was getting 16 minus 16, I was getting 0. So now because I have to pay 16, I will now charge that 16 will be an additional fee that
so the original cost of the phone now you will say is 120,000 shillings, for example. Exactly.
And I'll now charge you 16% more on the VAT when I'm charging you. So the thing will be more expensive to you. So the government is getting their revenue. That's the main thing. But to you, you'll be paying more.
You learn something
otherwise, because I would have knocked off the 2, I would have said, okay, I'll sell at 100. Because that 16 I was charged and recovered through the other 16.
So for